London is in crisis. Amazon just announced massive layoffs, and the ripple effects are hitting the city's real estate market hard. Apartment vacancies are rising, rents are dropping, and office spaces are suddenly empty. The mayor is scrambling, investors are panicking, and families are reconsidering their futures. This isn't just about jobs. It's about the value of your home, your investments, and the stability of the entire city. Stay tuned, because what's happening in London could change the property market forever. Welcome to UK Economic Report, your go-to channel for the latest updates on the UK economy. From inflation and interest rates to housing trends and government policies, we break down the numbers so you can understand how they impact your finances. When a company as large as Amazon makes sweeping workforce reductions, the effects are never isolated. In London, where tech workers contribute to high rents, property demand, and consumer spending, the layoffs have a domino effect. Apartment rentals in prime areas are seeing sudden vacancies, and landlords are struggling to find tenants at previous price levels. Real estate agents report that negotiations are tougher than ever, with renters pushing back on asking prices and contracts being delayed or even canceled. The market, which has been relatively resilient through economic uncertainty, is now entering a volatile phase. The layoffs don't just affect residential real estate. Commercial property is also under pressure. Office spaces leased by Amazon teams or associated startups are facing sudden underutilization. Subleases are being sought, and companies that had planned expansions are freezing their projects. This uncertainty is creating a ripple effect for small businesses in the vicinity, from coffee shops and restaurants to service providers who rely on daily traffic from tech employees. What was once a vibrant economic ecosystem is now being tested for resilience, and the mayor's office is trying to predict whether this is a temporary shock or the start of a deeper trend. London's housing market has long been a global benchmark, attracting investors from across Europe, Asia, and the Middle East. The city's high-end properties in particular rely heavily on a steady influx of high-earning professionals. With Amazon cutting jobs, there's immediate concern that demand will fall, especially for rental units priced at the top end of the market. Property analysts are now revisiting their forecasts, some predicting that prime locations may see a decline of 5 to 10% in rental yields over the next 12 months if the layoffs continue or if other tech firms follow suit. The mayor's panic is understandable because a significant contraction in the property market could have cascading effects on the city's economy, tax revenue, and long-term investment appeal. But the story isn't just about numbers, it's about people. Families who relocated to London for high-paying tech jobs are suddenly facing an uncertain future. Some have to consider moving to other cities, downsizing, or even returning to their home countries. This human element adds pressure to local schools, communities, and service sectors. Local governments may face demands to provide assistance or incentives to retain residents, and the pressure mounts as layoffs continue to dominate headlines. Real estate, in this sense, becomes more than an investment. It becomes a lifeline that determines where people live, work, and send their children to school. The mayor's office is reportedly exploring measures to stabilize the market. Discussions include temporary tax relief for landlords, incentives for new businesses to lease vacant office space, and even potential support for homeowners at risk of mortgage defaults. However, policy interventions take time and markets react instantly. By the time solutions are implemented, property prices may have already adjusted downward, making it difficult to restore previous confidence. The challenge lies in balancing immediate relief with sustainable long-term strategies, and the uncertainty is creating anxiety among investors and residents alike. International investors are watching closely. London has long been a safe haven for foreign capital, but the sudden vulnerability of the real estate market raises questions about risk exposure. Investors who had placed large sums in rental properties are reassessing portfolios, and some are delaying purchases until market conditions stabilize. The city, once considered recession-proof for its high-end property, is now proving more sensitive to corporate layoffs and tech sector shifts than previously thought. The mayor's panic reflects a broader anxiety. London's economic narrative is changing. The city must adapt quickly to maintain its status as a global hub. Tech layoffs also have broader economic implications beyond real estate. The sudden reduction in workforce affects retail, leisure, and hospitality sectors, as former employees cut back on spending or relocate. Local businesses that had flourished around Amazon offices, cafes, and shopping districts are seeing lower foot traffic and declining revenue. Even cultural institutions and entertainment venues may feel the pinch as discretionary spending declines among tech workers. The interconnectedness of London's economy means that what seems like a corporate decision reverberates through the entire urban fabric. It's also worth noting the psychological effect of such news. Markets respond not only to facts, but to sentiment, and the mayor's visible concern signals to residents, investors, and business owners that the situation is serious. Confidence in property investments is fragile, and uncertainty can trigger preemptive actions, such as early selling or renegotiating leases, which in turn can accelerate market decline. The Mayor AS challenge is to reassure the public without underestimating the potential impact, a delicate balancing act that few politicians manage successfully. Analysts are also discussing potential silver linings. While layoffs are undoubtedly negative in the short term, some see opportunities for buyers and investors who can navigate the volatility. Reduced demand could make previously unaffordable areas more accessible, and commercial spaces may become more flexible for emerging businesses. However, these opportunities are contingent on careful timing, understanding the local market dynamics, and anticipating the broader economic trends set in motion by the tech sector. International media has picked up the story, further amplifying attention on London's property market. Headlines highlighting the mayor's panic and Amazon's workforce cuts create a feedback loop where perception influences behavior. Potential buyers and renters outside London may hesitate, while investors within the city watch for signs of further instability. In financial terms, the market's reaction is partly a result of news velocity as much as underlying economic fundamentals. Thanks for watching UK Economic Report. Don't forget to subscribe and hit the bell icon to stay updated on the latest UK economic news, expert analysis, and financial insights that matter to you.